We ready to start, Scott?
We're started.
Okay, thanks so much. Hi, I'm David Mandy, president of O&M Partners, and I want to welcome everyone today to the Trilogy Metals Town Hall webinar. For those who are new to these O&M broadcasts, we like to think of ourselves as the link between the investing public and public companies. In past times, these groups passed each other like ships in the night. Very hard group to target, but our digital roadmap has enabled us to keep pace. Tremendous changes in investing, the demographics, and how people receive information. We want this broadcast to answer all of your questions. Questions will be easily answered by going to the question portal, go to webinar, or by emailing us. For any questions that remain unanswered, we'll follow up in a timely manner after the call. For those who dialed in with your phone, the only way you can hear our pre-recorded introductory presentation is on your computer speakers. If that's not possible, you'll be able to hear the main presentation in about 10 minutes, so please stay tuned. Before we turn to our host, I'd like to introduce our special guest speaker today, Joe Mazumdar. Joe is the editor and analyst of Exploration Insights. He was a senior mining analyst at Haywood Securities, then Canaccord Genuity. His work includes Director of Strategic Planning, Corporate Development at Newmont, Senior Market Analyst at Phelps Dodge. Joe also worked technical roles at IM Gold. He's a Master of Science in Mineral Economics from Colorado School of Mines, and he's a real pleasure to have him here to talk about base metal category and mining in general. So I'm going to pass the call over to
Hi, thanks for having me. Today I'm going to just talk a little bit about the copper market and the volatility in it. Like in 2020 year to date, the copper market has basically been inextricably linked to the impacts of the COVID-19 pandemic on global industrial production, specifically on China, because that is the largest consumer of a lot of commodities and also copper. So from mid-January, there was a peak in the copper price, year to date about 290, 288, and the copper price from then fell 27% to a low of about 210. And during that period, we saw global inventories, so whether it's the London Metal Exchange, COMEX, the Shanghai Foreign Exchange, all these copper inventories basically doubled from about 500,000 tons to close to 1 million. And so what we've been seeing is a drop in industrial production in China. So back since 2015, China industrial production has been around 10%. Since 2015, it dropped to about 5 to 7%. And then it was at about that level at the end of 2019. But what we've seen, because of the COVID-19 pandemic shutdown in China, which is the second largest economy, the industrial production dropped to a level of negative 13 to 14% over the first 2 months of the year, which had a significant impact on the copper market and hence drove up the inventories and dropped the copper price in the first quarter. But, the number of cases in China rose from almost nothing to about 80,000 and plateaued. And so when it plateaued, the government in China started bringing, production back online. And so what we've been seeing in April, May is a positives in industrial production, about 4 to 4.5%. And because of that, we've seen a rebound in the copper prices from about March 23rd. We've seen the copper price rise about 24% to over $2.60 per pound. So on the demand side, we've seen a recovery, and that's what we've seen in the copper price. On the supply side, in near term, we've seen as the COVID-19 pandemic has migrated from Asia to Europe and then to the Americas, what we've seen is big lockdowns in a lot of Latin American countries, specifically Peru and Chile. The S&P Global Market Intelligence estimated about 51 operations being disrupted in those, globally, that put maybe 2 to 3% of 2020 production at risk. Like if I just look at Chile and Peru, Chile in the last half of 2019 was producing around 500,000 tons per month on average. And in the first 4 months of 2020, as these companies kept producing at a, let's say, a social distancing way of mining, they reduced production down to about 5%. There was a bigger issue in Peru because their drop looks to be more about 20 to 25% from the average monthly rate that they were producing at the end of 19 to the first 4 months of 2020. So part of the drop in demand in the copper market has been mitigated by a drop in supply as well due to COVID-19. Right now, we're expecting a surplus. Most of the pundits are expecting a surplus similar to 2019 in 2020, but potentially the market could be in balance in 2021, which would be a significant turnaround. And so that's basically what's happening in the near term, in terms of the copper market. We've seen a lot of volatility, COVID-19 related. Now we've seen a rebound, but in the long term, on the demand side, most people are looking at higher intensity copper usage, higher copper loading in vehicles, specifically with the advent of electric vehicles and potentially infrastructure spending as well going forward. So that's something we see on the demand side, but that might be like 3 to 5 years out. On the supply side, what I see is like companies like Codelco, which puts out about 8 to 9% of the world's copper production, maybe about 1.7 million tons last year. They need about $20 billion over the next 10 years just to modernize their current operations, just to sort of sustain this production going forward. So there's a risk there that they might not be able to meet it. Glencore, their operations in Africa are sort of at risk geopolitically by creeping nationalism. Also, their project in Argentina, Bajo de la Umbrera, is winding down, and they're looking to actually, bring on Agua Rica in the interim. And so that's something that's at risk with respect to bringing that to production. BHP, their big copper project, Olympic Dam, they want to expand that by about 75%. But right now that's still in permitting, so there is a risk it might not be able to meet their hopes of going from 200,000 tons per year to 350,000 tons per year. And then finally, First Quantum, they put into production their large Cobre Panama project in Panama, but they've had to lower their guidance by about 75,000 tons for this year because of COVID-19, and they had to shut down the operation. They were hoping for a May restart, but that still hasn't happened. So hopefully they can get back into production by June. And also First Quantum's got this other issue where they've got a lot of Zambian exposure, which they're implementing more of a big tax burden and sort of stopping people from actually going into that country to produce. So there's a lot of supply side issues that I see in the medium term that would, I think, be positive for the copper price. And another issue that we've seen is like the S&P Global Market Intelligence did the survey, about copper deposits that have been discovered, and established reserves over 500,000 tons of reserves. So in the last 30 years, from 1990, there have been 224 copper deposits discovered over this threshold of 500,000 tons of contained copper in reserves, adding up to about 1 billion tons of copper. They spent about $43 billion over that period of time in exploration, But what's interesting is in that first decade, 1990 to 99, there was 113 discoveries. So almost half of that 224 was discovered in that first decade, where they discovered about 600 million tons of reserves of copper. at a time when the copper price averaged about $1, and they spent about $6 billion. The next decade, they spent more, about $11 billion. The copper price was higher, averaged about $1.80, but they discovered 400 million tons, less than the 600 million tons of the previous decade, because they discovered 95 projects. So cumulatively, most of those projects were actually, the 224 were actually found in those 2 decades. And then the last decade, which would be 2010 to 2019, they discovered only 16 projects, which, about 80,000 million tons of copper, when the copper price was actually higher. It averaged about $3. And they spent more as well, $26.5 billion. So just pumping money into this has not generated more projects. And so that's another long-term issue for the copper market, is that if we don't have visibility into these projects right now, given how long it takes to permit, develop these projects, we could have an issue with copper supply over the next decade plus because of the lack of discoveries of new projects going forward. So for me personally, the base metals might be a contrarian investment right now, given everybody's discussion about the precious metals market right now. I continue to hold copper companies and looking for new ones to basically fill this void and this window over the next 5 years plus because of the shortage of copper projects out there to build and bring into production during a time where we expect higher copper loading as we see the electrification of vehicles going forward. So again, I'm positive on copper in the medium term, and in the near term, we're seeing a rebound in the price. So that's it for me. So thanks for having me.
And thank you, Joe, for giving us the benefit of your considerable knowledge on copper. We're now going to turn to our hosts, Tony Giardini, and also we have Pat Donnelly on the call with us. Tony is the president and CEO. Mr. Giardini has a well-known, is a veteran in the mining business, is well-known. He has extensive experience and has had key leadership positions with some of the major mining companies. Some of his previous roles, he was president of Ivanhoe Mines, a huge base metals development and exploration company. He was chief financial officer of Kinross Gold Corporation, Kinross Gold, a senior gold producer. Both companies operated assets and very kind of an understatement, complex international projects at various stages of development. So Tony has extensive experience in large capital projects. Previous to Ivanhoe, I always like to point out, and prior to that, he spent 10 years at Placer Dome, where he held a series of senior financial positions, including vice president and treasurer. Also a pleasure to introduce Patrick Donnelly, who's the vice president of corporate communications and development. I've had the pleasure of working with Patrick over the last decade. He has a broad experience in the mining business and capital markets, of course, corporate development and investor relations as well. He began his career as a project geologist 25 years ago, exploring for precious and base metals, also diamonds, in Western and Northern Canada. And subsequently, Pat worked for a Canadian securities firm as a base metals mining analyst. In addition to his work at Trilogy, he was also most recently president of First Mining Gold Corp, where he played a key role. So on that note, it's a real pleasure to turn it over to Tony.
Thank you very much, and thank you to O&M Partners for the opportunity to present today. And as you said, Pat and I are here in Vancouver, so we hope all of the technology goes well, and we're looking forward to giving a brief overview of what Trilogy is all about, and then hopefully answering any questions that any of the folks on the line want to ask us about Trilogy. So as a starting point, there is a presentation, and I'm going to run through about 12, 13 slides and just highlight what Trilogy is all about and give a bit more clarity on how we're advancing our project in Alaska. So with that, let's get to the first slide. As our opening slide indicates, the Trilogy story is really about high-grade, solid partnerships and operating in a very safe jurisdiction, which is Alaska. And with the bio that David read out and talking about my background, I've spent a lot of time operating in jurisdictions outside of North America as well as in North America, and I have a great appreciation for the ability to operate such a safe jurisdiction as Alaska, and certainly was involved with Alaska in my last role prior to Ivanhoe with Fort Knox when I was at Kinross. Our interests in Alaska extend to the Ambler mining district, and I'll get into the details a little bit more about how that partnership works with South 32. But just to give a highlight of Ambler as the district as a whole, there's 8 billion pounds of metal that has been already identified, 3 billion pounds of copper, 3 billion pounds of zinc, and over 1 million ounces of gold equivalent precious metals. And when you look at Arctic on a standalone basis, it's a deposit that contains around 43 million tons and a copper equivalent grade of over 5%. So that's a high grade deposit in anyone's books. And that project is currently has a pre-feasibility study that was prepared in 2018, and we'll be releasing a feasibility study in Q3, which will update the economics. On the pre-feas basis, as we highlight on the slide, had a $1.4 billion NPV and a 33% IRR, and I'll get into those details a little bit more as we get into the presentation. But Arctic doesn't begin to really tell the story about the Ambler district as a whole. We have an advanced exploration project called BORNITE, just 6 billion pounds of copper, plus cobalt credits as well. And then there's a host of other targets within the district that we hope to be exploring in the future. So the next slide really talks a little bit about the company in terms of its financial position and a shareholder base. And as you can see, we're well funded. We've got $15 million in cash at the corporate level, plus we have equivalent of $72.5 million of cash at the JV level. So when you take all of that cash together, it's almost about $90 million against US market cap of 261. So we're really talking about our share of the Ambler district being worth ballpark 170 million or thereabouts. We have a large institutional shareholder base, as you can see, with about 2% ownership from management and directors. And we have strong support from our institutional shareholders, many of those who have been with us from when the company was spun out of Nova Gold in 2012. In terms of the partnerships that I mentioned, I want to really highlight 3 key partnerships that we have. The first, and by the way, they're not in order of importance by any means, but I just want to take them as they've been given. So South 32 is a partnership that has evolved over the years, and initially South 32 came into Trilogy by making an investment and having the option to come into an Ambler JV with respect to the Ambler properties in Alaska. And they contributed initially $30 million for exploration expenditures, which was largely spent on Bornite over the last 3 years. And then in January of this year, we formed the JV Ambler Metals through a contribution of $145 million in cash and receivables. And for those of you who don't know South 32, South 32 is a large Australian mining company, approximately $6 billion US market cap with operations worldwide. They were demerged out of BHP a number of years ago. And when that demerger happened, there were no copper assets within South 32. So they've been looking at building out their copper exposure going forward. They did one acquisition in Arizona mining, and then entered into the partnership with us on the Trilogy lands after extensive due diligence. The second relationship I want to speak to is our relationship with NANA. And this really speaks to the hard work of our former President and CEO, Rick Van Nieuwenhuis, who through his efforts was really able to put together a landmark agreement with NANA, and NANA contributed lands into the Ambler mining district. And in exchange, NANA has the opportunity, once the construction decision is made, to take a direct interest in Arctic, or to take a net proceeds royalty going forward. NANA has a long mining history of what they call 14,000 shareholders, and they have been involved with Red Dog. Red Dog is actually their mine, which Teck operates. Red Dog is the largest zinc mine in the world. A lot of the thoughts that when we look at the development of Ambler mining district, we're factoring in some of the experience from Red Dog in terms of the infrastructure development, creating a toll road, and moving forward on that basis. And our partnership with NANA is not just focused really on ownership of the Arctic deposit and the other deposits that will hopefully be developed, but really on how we're going to contribute in terms of employment opportunities for the Aboriginal corporation and procurement opportunities in the district. And while we're speaking to NANA, there'll be other relationships with other Aboriginal corporations such as Doyon, which we'll be looking to manage as we go forward as well. So we see ourselves having strong partnerships with the Aboriginal communities where we operate. And then the third relationship that I want to speak to is with respect to ADA and the state of Alaska. So ADA is currently in the process of moving forward on the permitting process for the road that would allow us access to the Ambler mining district. And ADA is a development arm in the state of Alaska that is focused on infrastructure. Most recently, they had a meeting yesterday, in fact, where we approved a memorandum of understanding, which would see about $1 million spent this year on the next step in terms of that permitting, or not the permitting process, but really the engineering / study process that we expect to move into. And that memorandum of understanding provides for that funding to be split between the joint venture and ADA going forward. I want to stress that the concept of a road is that it will be paid for by through the development of the mines, but it will be a toll road that will be paid for over time. And in terms of looking at the economics, it's really focused on not just one mine at Arctic, but on other mine developments within the district, including Bornite and other potential Trilogy mines, as well as other advanced properties that are owned by other companies. So when we look at this road, the cost of a road is going to be borne by not just Arctic, but other mines in the district. And it's important to stress that this will be a private industrial road. It's not going to be used for recreation purposes. One of the key concerns in the community is about subsistent living opportunities, hunting, fishing in the area. And obviously, we don't want to disturb those activities. And so it's expected that this will be a private road for industrial purposes only going forward. When we look at where the mining district is located, we've talked about the state of Alaska, and there are already a number of large mines in the state. So Red Dog, as we mentioned, which is with NANA and Teck's participation, Fort Knox, Pogo, are just some of the mines in the district as a whole. And the district has a long history of supporting mining, and we see Arctic, which has a small footprint, as really being a type of project that makes tremendous sense for development, particularly given the relationship with NANA and other Aboriginal corporations, and the long expected life of the mining district at Ambler going forward. So when we look at ADA and talk about the development opportunities there, we're really talking about the development of a road, and the road is expected to be 211 miles, and that would connect the road to the Dalton Highway, and from there the concentrate would be transported by truck to Fairbanks. And there's existing infrastructure, rail infrastructure, that would take the concentrate from Fairbanks to the port in Anchorage, which is a year-round deep sea port, which would allow the concentrate to be shipped to markets all over the world. So the process that we're at right now with respect to the road is we've gone through all of the permitting processes. We're waiting for the record of decision, which we believe is imminent and expect to get within the next month. And from there, we would move into the next phase of the road, which would be the engineering and construction. And then the expectation is that the road has a 50-year life in terms of focused on the operations. And the Bureau of Land Management is the lead agency that we're dealing with respect to permitting, and ADA is the entity that will be moving forward in terms of the proponent for the road. So we've addressed, we've obviously prepared a final EIS. We've gone through the public comment period, and we're at that last step of the permitting process in terms of a record of decision. And from there, we move into the next step of the road process. In terms of a district as a whole, we've only really just begun to touch on the opportunities in the area. This is a district that's had a lot of exploration done in the past. When these assets were actually brought together into initially Nova Gold and then into Trilogy, they were originally owned by Kennecott and had been explored in the past by Kennecott. And the challenge had always been about access to the area. And that's why the road is key to overseeing the development of not just Arctic, but the district as a whole. So when we look at the development projects that are the opportunities that are there, Arctic is one of them. BORNITE is a second. And then we have a number of exploration targets that that we would be focused on from a development opportunity perspective to ultimately tie into either Arctic or BORNITE in the future. And on this slide, there's two deposits on each end. One is called Sun and the other one is called Smucker. And those are not owned by the Ambler JV, but they are other possible mines or opportunities, projects that could be developed in the future and are fairly advanced in terms of drilling that have been done on those projects. In terms of a footprint, this slide really just highlights where the resource is located. It's a very small footprint at Arctic. And as you can see from the slide, the grades, as I said earlier, equivalent of 5% copper, but there's precious metal content as well in terms of gold and silver. And that's an important consideration as we look at financing options in the future in terms of the best way of funding the capital for this project. These are the details from the PFS that was published in February 2018. And just to highlight a few items here, we had anticipated 10,000 ton per day mill capacity with a 12-year mine life. The discount rate that we used was 8% in terms of calculating the net present value. Net present value is approximately $1.4 billion based on the metal prices that we've assumed with $3 long-term copper and $1,300 gold. On a cash cost basis, it was approximately 15 cents after byproduct credits, with an IRR of roughly 33% and a payback period of about 2 years. The principal engineering firms that have been involved in terms of the capital operating and closure studies have been Ausenco, Wood, and SRK. As I said, we're in the process of updating our feasibility study, our pre-feas, and we'll be issuing a feasibility study shortly, and we'll have better clarity on the inputs associated with this project. And we do expect to see some increase in capital, given that the study was last done towards the end of 2017. But overall, the economics continue to be extremely robust going forward. And in terms of Arctic cash costs, these are the equivalent production and costs on an annual basis. And as you can see, we would expect to have very low byproduct net cash costs on a byproduct basis, with production of approximately 160 million pounds of copper a year. And in terms of concentrate, as I mentioned, we'd be looking at 3 different concentrates: a copper con, zinc, precious metals con. Precious metals accounts for about 12% of the revenue associated with the production, and that could be quite useful as we look at financing options associated with the project, given that those precious metals are very much a byproduct of the copper and zinc production. And as I mentioned before, because of the ability to get this material to a deep sea all year port, we'll have the option of being able to look at a number of different markets for this concentrate going forward. In terms of another view of the site, this slide really shows where the open pit is located and where the tailings facility is located as well. As I indicated before, it's a very small footprint overall, but we see tremendous potential in the district as a whole, and we just see Arctic as a starting point in terms of what we're looking at. In terms of the mine processing permitting process, we'll be moving through the next stage now, dealing primarily with the Army Corps of Engineers as the lead agency, and we're really looking at one significant permit that we would need to obtain. And as I said, we're in the starting stage, but we see this as being a fairly straightforward process moving forward on permitting. We haven't talked about Bornite because the focus has really been on Arctic, but it's important to highlight that Arctic is a starting point. Bornite has 6 billion pounds of copper, 77 million pounds of cobalt. Done a significant amount of drilling at Bornite over a number of years, and this is what we see as the next deposit after Arctic in terms of looking at development in the future. And just in terms of comparing Ambler to other VMS belt deposits in the world, we look at Ambler and we sort of compare it to something like Flim Flon, where they had a 75 years of mine production with a significant amount of copper produced during that time period. So we see Ambler, Bornite as being really the start of development within the Ambler mining district going forward. And in terms of catalysts, as I mentioned, we're waiting for the record of decision on the road. We're looking to commence summer exploration season shortly. Coronavirus has thrown a bit of a wrench into our plans, but we're looking to still have a bit of a truncated season. And we're very focused on ensuring that we have the support of the Aboriginal communities before we start that field season. So we're in active discussion with those communities to ensure that we have proper protocols in place to move forward in terms of our exploration plans for the current year. And in terms of an Arctic feasibility study, we see that coming out in the third quarter. And as I mentioned, we would then move into the next phases of the permitting process with respect to Arctic on the operation side. And with that, happy to conclude the sort of formal comments of our presentation and be happy to take any questions that anyone has.
Thank you, Tony. Wonderful presentation, so informative. Let's start with our friend Chesley Morton to start this off today. Chesley?
Thanks, David. And great presentation, I should say. With regard to the road, where does it actually end in your section? Is it right at the end of the Ambler district near Star, page 12, I think?
Yeah,
Sun rather, or does it extend all the way to Arctic?
So the road as is currently defined is 211 miles, and as you can see on slide 12, it takes us past Arctic and Bornite, not quite to Smucker, but certainly very close to there. And so what we would foresee going forward is that then we would have roads going from Arctic and Bornite that would connect up to Amdia and and that's how the transportation would work. When we also look at some of the satellite deposits that are in the area, they're within 4 to 5 kilometers of some of the targets that we're looking at right now, Sunshine, some of the others. They're 4 to 5 kilometers of where we're already located as far as Arctic goes. So I think the road is well positioned, and as I said before, it's going to be an industrial road. It's not going to be for private use, and that's a very key consideration in terms of moving forward.
Yes, I understand there's certain restrictions there with regard to commercial use and fees associated with that. What other kind of restrictions? Is it limited to certain hours of operation, number of tons, number of vehicles? Is there a possibility that there could be an upper limit that would preclude Smucker or one of the other projects from ever being developed because they couldn't use the road?
Yeah, so I think it's going to evolve in the sense that initially what will be built will be a one-lane road with pull-out, so that and trucks will have to radio ahead in terms of movements on the road. And then in time, what is envisioned is that the road would be expanded to a two-lane road, and that's when it would certainly open up more opportunities for other mines that are in the district or projects that are in the district to be developed. I don't have the statistics in front of me in terms of overall traffic on the road, but those are actually all available on the ADA website. There's some very good summaries of the road and the economics associated with the road, but also the expected traffic that would be on the road in terms of a number of vehicles. And once you travel the 211 kilometers to get to the Dalton Highway, you're effectively not limited, and it's really about the most efficient way of getting the concentrate to market. And since there is train service from Fairbanks to Anchorage, which is underutilized, that appears to be the most logical step going forward.
And construction, when that's forthcoming, will that be seasonal?
Well, I think that's something that ADA will ultimately be responsible for in terms of the construction. The joint venture will clearly be actively involved in terms of looking at that. And I think what we want to do is look at how the Red Dog Road was ultimately constructed in terms of the timelines and processes. My expectation is that at least on the initial basis, a lot of the work that needs to be done from an engineering point of view, which is about the first $70 million that needs to be spent on the road. It's not really dependent on weather conditions or not, so that can advance quite quickly. And then from there, it would really be, up to the engineers as the best way of constructing that road safely and be mindful of the communities that it impacts.
Yeah, my understanding is it gets kind of wet and boggy in parts of that road area during the summer. And so I was thinking that probably winter would be the time for most of the construction.
I mean, there's a lot of projects that have been developed with ice roads as a starting point, and clearly we don't see that as an impediment in terms of what needs to happen on the construction side. And I'm certainly familiar with ice roads with my involvement with Kinross and Kupol, where we needed an ice road to bring in all the supplies and materials. So we'll obviously be focused on that as we work with ADA to look at the best way of ultimately developing the road.
Well, thank you and all the best.
Thank you.
Thanks, Chesley. Great questions. Return to John Burke. John.
David, Tony, a very nice presentation. I particularly like those circular charts. It was a nice way to follow where you are and where you're going. That was very, very good work. A couple quick questions. BORNITE and Arctic are part of the partnership, correct? All the other squares are not. Is that? Am I correct in that interpretation?
So the partnership is 172,000 hectares of land, and so that equates to 1,700 square kilometers. I've used kilometers. I'm going to have to flip it into miles, but So it's a large land position. So everything that is in that joint venture, the Ambler Mining District, is captured in that. Smucker is not our asset. It's actually owned by Teck, and then Sun is owned by a private company. So those two do not figure into our land position, the joint venture's land position. They're really just highlighted because in terms of Ada looking at the development of the road and the economic justification, there are two potential mines that could be developed in the area. So that's why we have them on the map.
But all the others are part of the partnership.
Everything else is part of the partnership.
Okay.
And as I said earlier, the only limiting factor for us in the past has really just been, the ability to get in there and conduct exploration. And because it's a fly-in helicopter area, it becomes a costly endeavor. So our focus has really been on the most advanced projects, which have been Arctic and Bornite. But we've been conducting more and more surveys over the last several years to identify near-term targets. And although I don't have a slide in this presentation, you can go to our website and see the slides that are there that just shows all of the targets that have been developed. And one of the things that the road will ultimately do is give us far more flexibility to look at more exploration opportunities in the district on a much more cost-effective basis, because right now everything has to be brought in by helicopter. It's quite costly. Once we have the road there, we'll be able to look at more exploration opportunities. And we feel pretty confident that Arctic will not be a 12-year mine life. It will be something longer than that, because there's tremendous opportunities in the district as a whole.
Thank you.
Thanks, John. We'll turn to Paul Harris for questions.
Hello, Tony. Thank you for the presentation. Another sort of question on the road. Just want to get clear the timeline. You're expecting the record of decision in the next couple of weeks or next few weeks, and then you'll be in engineering phase. So when will construction kick off, do you think?
Well, I think the key is really working with Ada to move this process forward, and Ada is ultimately responsible for the development of the road. And we're keen on advancing the development as soon as possible. And part of that is to look at ways of funding that detailed engineering. So Ada has approval for about $35 million in funding, and one of the discussion points between ourselves and Ada has been about whether Trilogy, or not Trilogy, but Ambler, the JV, would be willing to partner in terms of spending money on the detailed engineering. And we've clearly demonstrated that we're prepared to do that. Now, the $1 million that I highlighted earlier, which subject to an MOU, is really just the starting point of that. And what we see as the logical next steps is, to the extent that we can start to accelerate the detailed engineering, that would go a long way. What we're really looking at is a road that's going to, start out as we talked about earlier, potentially as a nice road to allow the transportation of goods and materials into the area, but ultimately will evolve into a proper gravel road with hard pack with pullouts. So it's really going to be about how long is the engineering, financing, construction going to take, and we've sort of got on this slide plus or minus 3 years based on the information that we have with Ada.
Okay, so after you get the after the record decision is given, then it sounds like you've got to reach an agreement with Ada about how the engineering studies are going to be paid for. That'll be one of the sort of next things that's coming up.
I think we've got an MOU, and there's an initial contribution which is modest, but it's definitely a contribution, and there's certainly a willingness on our part to look at and I can't speak for the JV because the JV is Trilogy and South 32, but certainly from a Trilogy perspective, there's a willingness that we would look to ultimately match the amount of funding that Ada is looking at putting up for the detailed engineering to start this process in terms of getting it going forward. The economics for the road are such that what Ada proposes is having a toll road, and that toll road would really the tolls would be recovered over either the useful life of a road, which is 50 years, or some period that makes economic sense relative to the development of not just Arctic, but the other deposits in the area, Bornite, Smucker, and Sun. So, that's how it was proposed, and so that's how the recovery of the road is factored in. So when we look at our capital associated with the project, the capital that we've identified for the project is the construction capital and the capital for the development of the mine, and the costs associated with the road are toll costs that flow into our operating costs. So that is expected to be recovered over a longer time period. So yes, we're willing, ready, and able to start the process of moving things forward on the next phases of this development. And as you can see, in terms of all of these boxes that have been ticked and the hard work that's been done by Rick and others, this has been a long process, and there's a lot of work that's gone in there. The public has had ample opportunity to comment on where we're at. We believe that the communities that are impacted are supportive of where we're going, but we recognize that we can't take that support for granted. And as I stated on a number of occasions, this is going to be a private road. We're very concerned about impacting the subsistent living of the communities that live in those areas, and that's a big consideration for Anana and for Doyon and others, and we're obviously very aware of that. So yeah, we're looking forward to the next steps in the process.
Okay, so the 3-year engineering and construction period you have on this slide, that's for both the road and then the mine build, yeah?
No, that's a road and the construction, and what we would hope to do, that's a road, that's strictly on the road,
Okay.
and engineering of road and construction. And when we actually look at the permitting slide, which deals with the mine, and which I'm just trying to pull up here, where we see these steps is really on the engineering and construction of the mine. We also have a 3-year time period, and it's a question of do you dovetail that with the construction of a road? And that's something that we'll be discussing at the Ambler JV level in terms of the likely timeline of when we would start the permitting, detailed engineering, etc., associated with the road. But as I said earlier, a bunch of that work can be done without having to be at site, and then it's really as that road is developed, it gives us the opportunity to bring supplies and materials into the site and the camp. There already is an existing camp there, and commence the construction time period. So that 3-year period that we have here for engineering and construction could certainly overlap on the road side, depending on how quickly we're able to move on engineering and construction of the road.
Thank you. Well, one sort of final question. You mentioned that the precious metals concentrate perhaps opens up the possibility of streaming as part of the financial package. Is that something that will be you're going to explore or reflect in the feasibility study that's coming out?
No, the feasibility study is really just going to look at it from a perspective of a pre-financing perspective. So it's not going to have financing built in. So I said pre-feas, but I meant feasibility study. The feasibility study will not consider the financing of the specific project. The way our joint venture agreement works with respect to the project is that essentially the metal that's in the JV goes to each partner. So we don't expect that if streaming is in fact an option, and I'm not saying that that's the way we're looking at it. We think that there's lots of opportunities to look at financing. There's project financing opportunities. There's other opportunities as well. There could be offtake opportunities because there should be competition for the concentrate. But if streaming is an option, it's still something that Trilogy and each partner will continue to consider on their own. It is possible that the JV together may want to look at that, but that's not something that's been discussed at this point. And the reason why we mention streaming as a potential consideration is because there's 12% content of the revenue based on the $1,318 gold and silver price that I mentioned earlier. So there's lots of competition in the streaming space right now. There's lots of deals that are always announced, and there's lots of competition for these type of streams. And I can't stress how important tenure and jurisdiction is in terms of how people look at these streams. And that's a big advantage that we have. And the other big advantage that we have is that we've got a world-class partner in South 32, and we have a strong partnership with the Aboriginal corporations where we operate. Those are going to be important considerations as we look at all of the funding options associated with the project. So I don't want to focus solely on streaming. We're getting ahead of ourselves. It's really one option that we're going to be looking at going forward.
Okay, understood.
And I just want to lastly stress that within the JV, there's $145 billion of cash, which is effectively 4 to 5 years of spending that we already have. So we're in a well-funded situation in terms of how we look at our current lot in life.
Thank you very much, Tony.
Welcome.
Thank you, Paul, for your great questions. We also have Michael Williams on the line. Michael, questions today? Michael, can you hear us? Okay, we'll come back to you if you have a question. You can also text your question in. I'm going to turn to Scott now, Scott Edmonds, because several of our attendees in the audience would like to ask a question through Scott. Scott, over to you.
Great. Yeah, I have some questions here. First one is, if everything works out with the permits and the road construction, when will production actually begin?
Well, it's a really good question, and there's a lot of items that things that need to sort of boxes that need to be ticked. So, we mentioned the 3-year time period in terms of where the road goes, and 3 years as far as construction. So it's a question of if you sort of looked at the worst case scenario, assuming all of those things happen in line, you're sort of talking 6 years out if there was no overlap. If you're able to have some overlap, it could be a shorter time period. It could be more like 5 years or something less. So I think those are going to be the factors that will be at play. I mean, we believe that this is a really important project, not just for our shareholders, but stakeholders in general, and for the communities and where we're going to be operating in Alaska, and having some further diversification of the economy. And when you've seen what's happened on the energy side and what's happened in terms of tourism and fisheries right now in Alaska is really important. So it's about going through the necessary processes on the construction and permitting of the development of the road, and then the permitting process associated with the project. But I really want to stress that we're going to be dealing with the Army Corps of Engineers. We're really need one major license. Everything else is going to be coming at state levels. We've got the support of the Aboriginal corporation that is most significantly impacted by the project, and NAMA being a direct participant in the economics of the project. So we think there's a lot of really good positives that line up that hopefully see that period come down. I do also want to stress that one of the things that we'll be doing is we're putting a management team in place at the JV right now. And when that management team comes in, they're going to take the Trilogy feasibility study that's being prepared and use that to do their own assessment of where things go. And that will also have an impact in terms of how we look at timing. But, the reason why we wanted to get out to site this year is we wanted to do incremental infill drilling, look at more opportunities to find additional resources, and definitely prove that we're not talking about a 12-year mine life at Arctic. We're talking about something more significant, because that gives us lots of different options to consider. So there's lots of different points at play in terms of how we're looking at it. But I would look at the 3+3 as sort of the outside date, and hopefully we're going to come inside that time period.
All right, thank you. And this kind of ties into that question you just mentioned about life of mine. Do you have any prospects in the immediate area that you've identified that could extend the life of mine?
We do. We released some drill results last year from an area called Sunshine. There's also another prospective area called Center of the Universe. Those are all within a reasonable distance to where the Arctic mill would be located. So they would be the types of satellite deposits that we would see, and then there's a number of other anomalies that are in the district that we think, could be possible feeder zones for Arctic as a whole. One of the things that we'll need to consider right now is, we mentioned that there's a small footprint for the existing proposed 12-year mine life based on the upcoming feasibility study. We'll have to look at the tailings management and other tailings locations, of which there are locations that are adjacent to where Arctic is. So that would be a factor, particularly as we look at extending mine life beyond the anticipated 12,000 or 12 years at 10,000 tons per day.
Thank you. One just came in here. Alaska is going through a period of belt tightening at the moment. Would a tight state budget have any impact on the financing and or construction of the road?
I'm really not in a position to answer that, because at the end of the day, Ada is the proponent for the road. What I would say is this isn't a free ride on the basis of the joint venture. The road will, the cost of the road will be repaid, as will some profit component associated with the road ultimately. And it is really about looking forward and looking at the opportunities of opening up a district as a whole and creating employment opportunities, procurement opportunities for that district. And we see this as the first mine of many mines in the district, and more exploration in the district. And we also see this as, the types of metals that you want to see developed in terms of the changes that are happening in terms of green economy, et cetera, and copper, zinc being very important metals, cobalt being very important metals in that mix. So we look at it from the perspective that this is really the beginning, and the road is obviously key to opening up a district. And we definitely appreciate the belt tightening, but what is anticipated is that Ada would raise bonds in the public market. Those bonds would be repaid through tolls that would be generated for the use of the road, and there would be an adequate economic return associated with that. So we don't see how that necessarily ties into the state budget per se, but as I said, Ada would be the best source, and I would prefer whoever asked that question to have a look at the Ada website, where they provide significant information in terms of how they're looking at the economics and the economic rationale for the development of the road, which is key.
Thank you. Thank you. Next question is also about the road. What would be the typical size width of the road's right-of-way? Would it be large enough to allow for future expansion?
Well, what's initially anticipated is that it would start out as a one-lane road with pullouts. And what would happen is that there would be radio contact between traffic that would be going two ways, and that's why you would have the pullouts there. So there has to be coordination. In time, what would evolve is that we would see the second phase, which would mean that it would be a two-lane road. So you'd still have the pullouts, but ultimately you wouldn't have the need for those pullouts, because you wouldn't need to coordinate on that basis. But so there's certainly a contemplation of having a two-lane road, but the initial development would be one lane, and it would have pullouts associated with it, and obviously wide enough to accommodate any of the truck traffic that we would see on there. And I want to stress again that this would be an industrial road. It would be a private road, and not to be used for public purposes.
Thank you. Last road question. As for the road, are there concerns about caribou migration, which was an issue at Red Dog?
It's a very important question, and we are very focused on caribou migration, and we want to ensure that obviously those considerations are taken, that caribou migration is factored in as we look at the development of the road, and that will be a key determinant as we go forward. And I did state earlier that we're thinking about subsistent living in the area, and about hunting, and about fishing, and the road doesn't impact any wetlands, and that's an important consideration. But you know, a lot of study work has been done on the caribou, and that will be an important consideration as we look at the ultimate path of a road. But that's been, you know, those questions have been asked from the beginning of this EIS process to where we are today, and they will be very carefully considered and factored in once construction begins.
Thank you. Next question: how much cobalt do you have, and is there any way for Trilogy to expect profit off of that cobalt?
Well, we indicated that there were 77 million pounds of cobalt at BORNITE, and as we said, BORNITE is less advanced as from an economic perspective as Arctic is. So, you know, the way we would obviously benefit is once we're able to get that project up and running and you know, looking at the recoverability of that cobalt. But we haven't done the same detailed studies that we've done at Arctic at this point. And the inferred resource that we indicated was based on drilling work that we've done. And what we'd have to look is obviously at the economics of recovering the cobalt. I mean, what's important, obviously, of having a domestic cobalt source is when you look at where cobalt is actually being mined right now, a lot of that is in more challenged jurisdictions. And so having a domestic source is very important. And this is a sizable resource that we would hope to be able to economically recover once BORNITE is becomes a production asset sometime in the future. But it's early days.
Great, thank you. Next question: is there any acid generating potential of the stripped waste rock material? If so, how is that handled?
I mean, all of those considerations will be factored into how we look at the development of the tailings pond and tailings management. So we've done robust tests with respect to the treatment of tailings and water management, and all of those will be factored in as part of the feasibility study and the further studies that will be done at Ambler, and will be considered in terms of how we look at tailings storage, lining of tailings ponds, and water reclamation and water management in the future, and then the reclamation process that we look at once the mine is reclaimed at the end of a mine life. So those are going to be key determinants. We're very focused on ensuring that we build a mine that doesn't have adverse impacts to the environment once that it goes through the reclamation process. And we're obviously very mindful of the concerns of the community and others about you know, the potential impact of a mine on the district. So it's all going to be factored in as part of the detailed development considerations.
Thank you. And last question from the audience is, I know that you had mentioned COVID slowdown impacts over the spring, but how are you prepared for the possibility that over the summer COVID looks like it could be increasing, and how are you prepared to mitigate that?
Well, that's one of the advantages of having a partner like South32 at the JV level. South32 operates in a number of different jurisdictions, not just in North America, but in Africa and elsewhere. And obviously, we'll leverage off of their strong protocols that they have at their operating mines and exploration development sites to really make sure that we've got excellent protocols in terms of the decisions that we're making. Firstly, Alaska's been, you know, done relatively well in terms of the number of coronavirus cases. I think it's somewhere over 700, but they've certainly done well in terms of the number of cases. Within the Northwest Arctic Borough, I think there have been a total of 4 cases, and there have been no hospitalizations that I'm aware of. But we're obviously in consultation with the community, and the last thing that we want to do is have a field season that results in the virus being brought into the community. So part of what we're looking at is having a truncated season where we would have people go to the campsite. They would be isolated. They wouldn't be moving from there. They would complete that work on a truncated basis and then leave the community. But we're only going to do that on the basis that we're able to execute without putting the community at risk. And those are some of the considerations that we're factoring before we make a decision to have a field season this year.
All right, thank you. Those are the questions that we got from the audience.
Well done, Scott. Thank you so much. And it was a great presentation, Tony. I'm going to turn it back to you for closing remarks.
Well, first of all, I want to thank O&M Partners for the ability to provide the presentation. It's, we're in a bit of a new reality, and being able to reach out to existing shareholders, analysts, and those that are interested in the story is really important to us, and we won't be able to do it without these platforms. So firstly, thank you to O&M. Secondly, I just want to reiterate that, we're really talking about not just one project, we're talking about a mining district that we're focused on. And, I highlighted at the beginning, this is a high grade initial project. We're in a safe jurisdiction. We've got great partners and partnerships. We're looking at an opportunity of focusing initially on Arctic, but looking at many more opportunities in the district. And we want to work very closely with our partners, whether they're including ADA, ANA, Doyon, and South 32, obviously, in the state of Alaska and federal government. So just the beginning of a story. We've got a number of catalysts, and look forward to future opportunities to update you on how we're doing. Thanks again.
Thank you, Tony. Thanks very much for a great presentation, great answers to the questions, very, very straightforward. And I want to thank Pat Donnelly for all his help, and thank everyone for your attendance today. And appreciate your interest, and we'll be following up to answer any questions that come up after the call. And I want to wish everyone a very pleasant evening. Thanks again, Tony. It's a great presentation. Great to work with you. Be well, everyone.